I was scrolling through my favorite analytics platform this week, the Habistat, looking for some cool charts to share. And the one that you're looking at right now jumped up. It told me that in early January, months of inventory has climbed to about 8.64. Now, this is by far the highest reading that I've ever seen, the highest that I can find in TRREB history going back all the way to 1996. I want to break down this chart for you, talk about the validity of the chart based on what I am seeing in my weekly recordings. We're going to jump into the Toronto condo market that is seeing months of inventory actually up near this level, over 8 this past week. I'm also going to touch on the first couple weeks of January. What have sales looked like relative to the last few years? And a few important factors that are going to determine the direction of the real estate market in the GTA for 2026. Jumping right into this chart from the Habistat, where we can see that from the end of December, we came from months of inventory readings of just shy of 6 months of inventory, and that has shot up in early January to about 8.64 months of inventory. I touched on this in last week's video. We're at a point of the year where you'd expect to see months of inventory starting to climb because sellers tend to bring properties back to the market. You see active listings increase quicker than buyers get back into the market and start purchasing properties. There's always that little bit of a week to 2 week delay of a property coming to market before it is actually sold. So we're kind of in that lag, that little latency gap right now at this point in time. While I am seeing the same things in my numbers, that months of inventory is increasing pretty rapidly through the first 2 weeks of January, I didn't see it getting quite to those highs that were reported on the Habistat. I'm coming in at just shy of 7 months of inventory in my weekly readings. That's 6.79 right across the entire GTA. That's compared to about 5.4 last year at the same time and 4.11 back at around the same time in January of 2024. The big difference is that last year we had one more week where months of inventory climbed to just over that 6 number in 2025, whereas this kind of marked the peak for months of inventory for all of 2024, or at least we got into the fall market, but this was the early kind of winter/spring season peak for months of inventory. Toronto condos specifically are much closer to that GTA-wide months of inventory total that we saw on the Habistat chart. Again, I've been tracking this every single week since going back to May of 2022. Up at 8.41 is definitely the highest that we have seen in the time that I've been tracking. It's the highest that I can pull together looking at historical TRREB data as well. 7.05 is where we were at in 2025 at the same time. It was 5.62 back in 2024, and we were at 5.11 back around the same time in 2023. And a similar story what I just showed you with the entire GTA picture, this represented the peak back in 2023 and 2024 for that spring winter market. Last year we had one more week to go before we hit that peak, and based on what I'm seeing in the numbers, I could see inventory still climbing a little faster than rate of sales going into next week. So I would expect to see Toronto condo months of inventory peak out next week as well. Regardless of the chart you're using, whether it's the Habistat or mine that I put together on that weekly basis, we are seeing unprecedented levels for months of inventory, even for this time of year. I'm not saying it's going to sustain here for a long stretch of time. I wouldn't be surprised if it fell off pretty rapidly into the spring market, but seeing where we level out will be something to keep an eye on over the next couple of weeks. One thing we're going to want to keep an eye on is that velocity of sales, how many sales are actually occurring. What I've done is I've pulled the first 14 days of January for every year going back to 2022. Freeholds are in blue, condos are in orange, and this is the total for 14 days. So you can see that 2026 is actually off to a more sluggish start than 2025 and 2024. Not quite as slow as we saw in 2023, although freehold properties are outperforming what we did see back in 2023. It's really that condo market that is dragging things down. I also don't want you jumping to conclusions on what this means for the rest of the year, because 2 weeks of a sample size of a 52-week year, we don't have enough here to make a trend. This is just maybe going to be an indicator of what our spring market shapes up to look like. Because as you can see, 2025 coming in at the slowest total number of overall sales for the year, but it was still a more active market than we saw in 2023. 2024 was relatively similar to what we saw in 2020, but we had, about 30% less sales in 2024 than we saw in 2020. So don't make too much out of what the year-end picture is going to look like based on these next couple weeks, but it could give us some indication as to what the spring market is going to look like. GTA condos have seen 394 sales occur through the first 14 days of January. That is the slowest opening 2-week stretch to a year since at least going back to 2020. I didn't pull the data going back any further than that, but it's even slower than 2023. Here's how condo sales shaped up for the entire year. Again, we can't draw too much from these first 2 weeks of January. 2025 was the slowest year for condo sales. I'm not guaranteeing that 2026 is going to be slower than 2025, but we're definitely off to a slower start this year than we saw 1 year ago. There are going to be a number of factors that affect where the market goes in 2026. And I want to talk about 3 of them in this last segment of the video. First, on the condo side, there's a supply crunch coming later on, but this year, I don't think we're going to see that supply crunch. So this is from tullymortgages.ca. You can see that Toronto Condo starts fell 51% from 2023 to 2024. Completions were projected to drop from that just 31,000 units last year to less than 18,000 in 2026. So 17,500 units there or thereabouts. A lot of that inventory probably will come to market. So I can see a bit of more of a supply glut on the condo side this year. And this is in addition to people who are just trying to sell their condo regularly. This new inventory coming to market is going to put pressure on end users trying to sell. And it's really going to suck up some of that liquidity from that move up market. People moving from, city condos to suburban townhomes, or city condos to city townhomes, city condos to bigger city condos. We're going to see that supply glut, especially in that micro condo, that smaller condo space, come to market this year, and I think really affect people's ability to move up that property ladder. Speaking of those micro condos, that gets to our second point of what's really going to affect that market. So micro condo units in the city have seen their popularity plunge over the last 2 years. This is from mpamag.com. Record immigration levels, low mortgage rates, and surging rental demand led many builders to prioritize the number of units and sacrifice the size of those units. But appetite for those mini units, those micro condos, has nosedived among renters and investors alike. So renters aren't as interested in that product, meaning that investors who are scooping that product up don't have as much of a renter pool to rent their properties to. We all know that rents are coming down across the board. So you really eliminate that investor, that condo investor buyer from the pool of buyers. So while we have a glut of supply coming on one side of the market, the demand piece is definitely shrinking as investors are removed from the buyer's pool. Doug Porter, the chief economist at the Bank of Montreal, said he doesn't see a quick turnaround on the micro condo front. That's probably the last area that will turn, just because of the amount of supply that is now hitting the market. Population growth is now starting to slow very rapidly, so rents are coming down, at least market rents. I suspect that the condo market will remain a challenge through 2026. Further to this, Robert Hogue from RBC, great name, Robert. He says high development and construction costs have pushed new project pricing beyond what many buyers can afford, particularly when existing alternatives offer immediate occupancy and established neighborhood amenities. So think about that logically. You could be either paying for a what if in that pre-construction space, which is why that has really dried up, or you could pay less per square foot than the pre-construction price to be in an established building in an established neighborhood. I think it makes a lot of sense why people are making the decisions that they are making in terms of what types of properties they are buying in this market. And the last factor I want to touch on is something we talked about in last week's video, but it is that kind of mortgage renewal wall that we are going to see, which is going to put some more pressure on sellers, potentially impacting the supply side of our supply and demand equation. As Ron Butler told CTV in an interview, one thing for sure is that it's going to get worse in Ontario. There's no possibility of better. He cites that roughly 60% of Canadian mortgage holders will face higher monthly payments when their loans come up for renewal in 2025 and 2026. Now, the good news from the Bank of Canada's Financial Stability Report is that the average price increase for mortgages renewing in 2025 and 2026 will be smaller than was anticipated last year. You can see in the 2024 report, they anticipated it would be 11.3% increase in mortgage payments, whereas in the 2025 report, they're saying that mortgage payments will go up by about 5.2%. All told, it's not the rosiest picture for GTA home prices, at least from the perspective that they won't be rising in 2026. In my opinion, I think that this condo market, again, affecting the liquidity of people moving up into the freehold market, is going to slow things down. It's going to hold prices back. I do think we're in a new price discovery phase just based on the levels of month of inventory that we are seeing. You can't really sustain at these levels for long periods of time. So I wouldn't be surprised if 2026 is a year of further price discovery in the condo side, probably in the freehold side, as a result of people's, ability to move up being affected by what they can get on their condo. I think the entire market is going to have to come down to meet what is happening in the condo space. But I want to know what you think in the comments below. Is 2026 the year where things finally level off? Is 2026 the year where things take off? Or will we see greater correction throughout the next 365 or so days? Thanks so much for sticking with me right through to the end of another video. Until we speak again next week, please stay safe and cheers. If you like this video and the things that I do on this channel, consider subscribing to the channel, liking this video, turning on those notifications, and check out some of the other videos that I've done over the last couple of weeks.